For decades, the world has believed something that feels almost permanent, that the US dollar is the center of the global financial system. Governments store it, banks trade in it, entire economies rely on it. But what if the dollar's dominance was never permanent at all? What if it was simply the result of a system that made it appear inevitable? I call this the reserve currency illusion. The illusion that one currency can permanently anchor the global economy. And like most financial illusions, it works because it solves a problem. After World War II, the global economy needed stability. Countries needed a trusted asset, something predictable, something liquid. The United States had the largest economy, the deepest financial markets, and the strongest military power. So the dollar became the system's foundation. Not because it was perfect, but because it was the most trusted option available at the time. And once the system formed around it, something powerful happened. The dollar became self-reinforcing. Countries trade in dollars because everyone else trades in dollars. Central banks hold dollars because everyone else holds dollars. Investors buy US debt because the market is the largest and most liquid on Earth. This is the first layer of the reserve currency illusion: network gravity. The more people rely on a system, the harder it becomes to replace. But that doesn't mean the system is unbreakable, because every reserve currency in history eventually faced the same problem: confidence. Before the dollar, the British pound dominated global trade. And before that, other currencies anchored earlier financial systems. Each one eventually weakened when the underlying power behind it shifted. And today, some investors are starting to wonder whether the same pressures are slowly building again. America's national debt continues to expand. Political divisions make economic policy less predictable. And global power is becoming more distributed than it was 70 years ago. Naturally, people begin looking for alternatives. The euro is often mentioned. Europe has a massive economy and a credible central bank. But the eurozone is politically fragmented, and financial crises in the past revealed how difficult it can be for Europe to act as one unified system. Others point to China. Its economy is enormous, and its global trade influence keeps growing. But trust remains the missing piece. Capital controls and government intervention make investors nervous about whether they could freely move their money during a crisis. Then there is cryptocurrency. But volatility makes assets like Bitcoin extremely difficult to use as a stable reserve currency. And most stablecoins simply mirror the dollar itself, which leads to a surprising conclusion. The world may not be replacing the dollar with a new global king. Instead, we may be entering a different kind of financial system, one where multiple currencies share influence across different regions. Economists sometimes call this a multipolar currency system. Not one center of gravity, but several competing ones. And that changes something fundamental. Because the reserve currency illusion teaches us a deeper truth about global finance. Dominance doesn't last forever. It only lasts as long as the system around it continues to believe in it. The dollar may remain the world's anchor for many years, but the moment investors begin imagining alternatives, the illusion starts to weaken.